Welcome back to the Plan Future Insight. This is your financial bodyguard, Dada, speaking. Good morning, my friend. What a great way to start the day, checking the market pulse before making any move. Let me share what the numbers are telling us today. Let's start with the simple truth. Markets are in correction mode today. The Nifty 50 is at 23,897, down 1.14%. The Sensex is at 76,664, down 1.29%. The VIX, which measures fear, is at 19.71, up 6.04%. Fear is creeping up, but this is not panic. This is a normal profit booking day, not a crash. Now, here is where it gets interesting. The Nifty pay is 22.84, against a 10-year average of 21.5. That gives us a valuation deviation of plus 6.2%. Dada says this is fairly valued territory. Not cheap, not euphoric. Your SIPs should continue normally. The 15-day RSI is 47.35, which is neutral, consolidating. No extreme signals. Let's talk about who is buying and who is selling. Foreign institutional investors were net sellers of nearly 8,800 crore rupees on the 24th of April. Domestic institutional investors were net buyers of about 4,700 crore rupees. This pattern has been consistent for weeks. DIIs, which include mutual funds and insurance companies, are acting as the backbone, preventing a deeper fall. This is actually a positive structural signal for long-term investors. Now, what is likely next based on 20 years of market cycles? The bull case has a 35% probability. Nifty holds the 23,500 to 23,800 zone, and earnings growth plus D support pushes it towards 24,500 in the second quarter. The base case has a 45% probability. Consolidation between 23,200 and 24,200 for the next 4 to 6 weeks. SIPs work perfectly here. The bear case has a 20% probability. If the VIX spikes above 22, Nifty tests 22,800 support. The key risk to watch is crude oil at $99.13 per barrel and the rupee at 94.23 against the US dollar. If crude sustains above $100, it pressures imports, inflation, and corporate margins. That is the number one risk factor right now. The key support is that DIIs have over 7,500 crore rupees of buying capacity per week. That is your safety net. Now, let's look at sector rotation. Nifty Bank is undervalued by 10.1%. Dada says hold and accumulate, best value in the market. Nifty IT is slightly expensive at plus 9.6%. Under watch, lagging, wait. Nifty Defense is very expensive at plus 28.6%. Profit booking zone, momentum still strong but valuation stretched. Nifty Pharma is fair at plus 4.9%. Increase allocation, improving momentum, good entry. Nifty PSU Bank is cheap at minus 12.5%. Increase allocation, undervalued with improving relative strength. Nifty Metal is cheap at minus 18.6%. Hold, cheap but weakening momentum, don't add yet. Nifty CPSE is cheap at minus 15.4%. Increase allocation, PSUs are the hidden value play. Let me tell you what is really happening here and what most investors get wrong. The fee selling scare is normal. FIIs sold in 2008, 2013, 2016, 2020, and 2022. Each time, DIIs stepped in, and patient investors who continued their SIPs came out 2 times, 3 times, 5 times richer. The market is not the economy. It is a voting machine in the short term driven by sentiment, and a weighing machine in the long term driven by earnings. My sentiment score, which I call S_Dada, is currently at minus 0.11. That is in the neutral consolidation zone. This is not the time to panic or be aggressive. It is the time to stay disciplined with your SIPs. The market is simply catching its breath. Here is what you can do this week. Step 1. Review your portfolio. If you have profits in defense or small cap funds, consider booking 20 to 30% and moving to large cap regular funds like SBI Large Cap or HDFC Flexi Cap Regular. The mid to large cap ratio at 2.05 times says mid caps are overheated. Step 2. Over the next month, start or continue your SIP in Nippon India Growth Mid Cap Fund Regular or Axis Mid Cap Regular, but keep it to 25% of your equity allocation. Rest in large cap plus balanced advantage. Step 3. With a 6-month horizon, if Nifty pay dips below 20, which means valuation deviation below minus 7%, that is your aggressive accumulation zone. Increase equity allocation by 10 to 15% via lump sum in regular funds. Dada's wisdom of the day. The market does not reward the smartest. It rewards the most disciplined. When FIIs panic, DIIs buy. When everyone fears, the SIP investor smiles. Your monthly SEEP is your superpower. Never stop it during corrections. I'm genuinely proud you are asking these questions. This is how wealth is built, not by guessing the next move, but by understanding the game. Remember, investment in the equity market is subject to market risk. We do not claim any guarantee of return in equity-related investments. Past performance is not indicative of future results. Always consult your registered financial professional before implementation. This is Dada, signing off. Stay disciplined, stay invested, and let time do its magic. For more guidance, visit planfuture.in. Thanks and regards, Cost of Bishwas at www.planfuture.in.